The market's opening flat, as was the indication with the from pre-opening, just about 5 points higher on the Nifty.
So we've got the market, which is not going anywhere. There's about a 6.5 odd point change, but no real direction. Absolutely no improvement on the index. There's about a 5 point change lower. We're off the high point.
Absolutely quiet. The market just refusing to break out of even the narrowest of the ranges. The market decline was also narrow.
Yes.
That's the only point that I would say in terms of the move on the indices.
The Sensex drops over 300 points after a sharp fall in late trade. The Nifty gives up 10,900 and drops below its 200-day moving average. Markets were subdued across the region, in Asia earlier as well.
Metal stocks bucked the trend, led by Tata Steel, JSPL and Nalco, but PSU bank stocks were the big underperformers, with State Bank of India and Bank of Baroda falling the most.
Sun Pharma management tells CNBC TV 18 that they have received and responded to 2 queries from the regulator, the Securities and Exchange Board of India, SEBI. However, there is no clarity whether the queries are related to the whistleblower complaint or not.
ITC, the stock slides 4% despite reporting a positive set of third quarter numbers. Indigo's profits nosedive over 75%, but the airline shows operational improvement with a recovery in revenue and margins. ICICI Prudential tanks 11% after a disappointing third quarter.
SBI Chairman Rajneesh Kumar may meet SEBI chief, the regulator, to discuss Etihad's Jet Airways revival proposal. Sources say a request for pricing relaxation under SEBI's acquisition code is on the agenda, and that is a CNBC TV 18 exclusive. Okay, so those were the top 5 headlines from Dalal Street today. It was looking like an absolutely tepid, nowhere to go kind of session, but then things picked up, and how, especially in the second half, and particularly in the last 1 hour of trade. This is Markets Today Talk Back, where we tell you about all of what happened in those trading hours. I'm Prashant Nair, with me, my colleague Ekta Batra. Hi, Ekta.
Hi, Prashant. Yes, absolutely. Well, over the next 30 minutes, we will be updating you with all what took place in those, in terms of the 5 market stories, and our guests will be answering all of your queries as well. So we'll get to that in just a bit. But Prashant, it turned out to be quite a session. I mean, last hour of trade was much more volatile.
I mean, actually one way, right? I mean, it turned out to be pretty much a one-way kind of a market towards the end, towards the close. And for the longest time, it wasn't looking like it was going anywhere. It was flat for most parts. And then look at that waterfall kind of a slide which came through. So yes, sharp sell-off in the last, I mean, actually I should really say not the second half, but the last hour really. Mid-caps, small caps did much better. I mean, there was a 0.17, a third of a percent cut respectively in the small cap and mid-cap indices. So, and the market breadth was also not all that bad. For a market on the Nifty, which was down 90 points, market breadth advances and declines were, I mean, declines outnumber advances, but they weren't sort of completely outnumbered in that sense. Actually, we've had days, the last couple of days, when the Nifty's ended flat, that the advance decline ratio has been much worse as compared to today. And that is thanks to the broader market not doing as poorly as the Nifty did. But I think the indications have been there for the Nifty as well. Essentially, the fact that even within the Nifty, forget about the broader market, even within the Nifty, there was one Reliance, there was an odd HDFC Bank, there was an odd Infosys. On days there was Sun Pharma. So very few stocks were really holding up the Nifty and even contributing to some of the gains that we've seen very, very recently. So I think that kind of came undone, and the market sort of dropped 90 points by close. You know, around the globe, I mean, you look at Asia, markets almost were at a standstill. There wasn't very much going on. You know, some markets were lower, but not as much as what India did. India actually underperformed the rest of the region. You look at Europe, Europe actually is mostly in the green. So this is essentially give back, a very sort of, you know, focused give back that we saw very specifically here in India. Earnings, I mean, earnings-related stocks saw very, very sharp movements, as we pointed out earlier with ICICI Prudential and a few more, and we'll discuss and take those up individually in just a bit. But as far as stocks go, Ekta, what do we see?
Well, yes, ITC was in focus because of its numbers. So that stock, in fact, fell post its numbers, despite the fact that its volume growth was in line with expectations. No real big surprises on the downside from the numbers. Sun Pharma, it has been a roller coaster ride for Sun Pharma, to say the least. And today, it in fact recovered all the way to levels of around 430. So up around 3% for that one. Yes Bank comes out with numbers tomorrow, higher ahead of that. Z Entertainment, positive brokerage report, so that stock was higher. A couple of stocks such as Tata Steel were in focus, so that stock was up around 1.7%. ICICI Prudential, which lost out post numbers, that stock lost around 9% Granules India, which shot up quite a bit, so up around 7.5% for that one, still to come out with its Q3 numbers. And Prabhat Dairy was the other one post that big M&A deal where they have sold majority of their business. So that stock saw a deceleration from yesterday's trade and continued into today's trade. But let's in fact find out what our guests are making of the markets today. Ashwini, well, and Dipan, welcome to the show firstly. But Ashwini, over to you first. What do you make of the sharp sell-off that we saw today?
See, in my opinion, the market was contracting for last many days, and today just maybe you could have seen the first phase of expansion, and that expansion is happening on the downside. S&P 500 has also made a pattern where it shows bearishness in the days ahead. So it all depends on follow through. If we start to get follow through globally as well, then chances are that even we could go down. First support here could be 10,750 on the Nifty, and maybe 26,800 on the Bank Nifty.
Okay, so lower levels is what Ashwini is seeing. Ashwini, so tomorrow morning, if the markets were to start on a flattish kind of note, what would you recommend? Would you sell straight away or wait?
See, tomorrow chances are you will have a choppy day where you will have bouts of alternate selling and buying, and tomorrow you will get a fair idea whether there is follow through selling or this was just a one day type of event. So my sense is on rallies you should now be selling towards 10,850, 870. That was the earlier support. Now that becomes a fairly stiff resistance. So my sense is the banks are the one where there are most long positions. So we'll have to see what happens further on the banks. But overall, you can say 27,500 and about 10,850, 870. That these levels now become resistances, and any rallies towards those levels should be used to sell.
Okay, all right, Ashwini, thanks for that. Well, earlier today we spoke to Allianz Global Investors Lucy McDonald to find out what she makes of emerging markets like India going forward. Listen in to what she had to say.
Emerging markets look to have a bit more potential upside, we think, and India has been a bit of a bastion of stability over the last year. Probability is higher that the earnings in India deliver this year. And particularly with the financial sector, looks like that could be a source of upside this year and into next.
Okay, I mean, so we move on to the second story, and this is essentially sectors. Metal stocks had a good run in trade today. The Nifty Metal Index outperformed key indices to gain about 0.5% or so, led by stocks like Tata Steel, JSPL, Nalco. On the other hand, we had the Nifty PSU Bank Index, which was down more than 1%. State Bank of India, Bank of Baroda, Canara Bank were some of the main laggards. We've got actually a question coming in. Ashwin Nayak from the UAE has written in to us with a question on Tata Steel. He's been holding 100 shares of Tata Steel. His price is 501. Cost is 501 rupees a share. Actually holding the stock for the last 2 weeks. He's a long-term investor, wants to know if you should hold or sell. Long-term investor, and in 2 weeks he wants to know whether you should hold or sell. Dipan, in any case, what's your view on Tata Steel?
I think the view is broadly negative on metal companies and maybe Tata Steel also. Given that there is a scare as far as global growth is concerned, and the way China is slowing down, it's certainly going to have an impact on all commodity prices, steel included. So I would say it's better to be underweight in Tata Steel. In any case, industries like steel and aluminium are not for long-term investors. These industries are pretty much mature. Volume growth rates are in low single-digit, and companies which engage in expansion tend to have that period where their earnings expand. But then again, once the expansion is over and done with, you see them flattening out, and then in between there's a high degree of volatility in earnings because of changes in end product prices. So I don't think sectors like steel are for average investor. I think unless you're an industry insider, it's very difficult to trade or invest in commodities, especially steel. So I would say it's best to avoid the steel sector and Tata Steel in particular.
Okay, all right, Ashwini, what is your thought on metals? How is it looking as a sector to you?
The good thing about metals is that it's way ahead in its corrective cycle, fairly oversold. So if you are short, these are good levels to take some off, because on the metals index, we're right now at 2900, and any sort of pullback could be a pullback towards 3400.
We got one more question. Srinath Reddy from Kerala is on the line with a question on Punjab National Bank. Okay, do we have Srinath on the phone line with us? Okay, so I'm just going to read out the question. He's been holding 2,000 shares of PNB. His cost is 85 rupees each. He wants to know if he should hold or sell. I mean, Deepan, to you again. PNB? Okay, I think we lost the line with both Ashwini and... Okay, Deepan is back. Deepan, PNB, what's your view?
I think that's a bit difficult to answer, and maybe it's better to just hold on to the stock for maybe a quarter or two and hope that some positive news comes as far as their controversial issues are concerned with Nirav Modi, or even the lower credit costs on account of all NPAs being recognized and more or less fully provided for, or even for that matter infusion of fresh capital. So considering that there's been such a erosion in the value, you could expect a contra rally in PNB. So I would say that better to hold on, expect a trading rally. But PNB is not for long-term investing. Again, I think if you want to be in banks, then you have to be in the private sector banks for long-term investing. They have truly been the compounders. They have consistently delivered growth and created value for shareholders. So for long-term investing, I think best to be with the private sector banks. But yes, there is a trading rally which can be expected in select PSUs purely on account of lower credit costs and lower NPA recognition, or the entire NPA cycle coming to an end will benefit PSU companies and maybe PNB as well.
Okay, we move on to the third story today. Sun Pharma. I mean, it's been basically a story every day now this week. The management told CNBC TV 18 that they have indeed received and responded to 2 queries from the regulator SEBI. This comes a day after Sun Pharma announced that it will be transferring the domestic distribution operations from a company called Aditya Medisales to a wholly owned subsidiary. I mean, Ekta, you broke that story yesterday. It's come through. What are you picking up?
Well, for today, what we did pick up from Sun Pharma, and they confirmed what we had asked them, that in fact SEBI has reached out to them. They have reached out to them with regards to 2 queries, and Sun Pharma has replied to both of those queries. Now, we don't know whether or not it is to do with the whistleblower report. The company said that they cannot basically confirm, or they cannot talk about the fact, can't say whether those queries were related to the whistleblower complaint. But the assumption is that it's probably going to do with all of the developments which have happened all the way back since early December, which were related to the whistleblower report. So the assumption is that the company has not confirmed. They've replied back to those 2 queries from SEBI. But the point is that Prashant, it is probably moving forward now. So maybe there could be some amount of closure, because the Sun Pharma management is also taking some amount of proactive steps. And on the other hand, you have the regulator probably reaching out. So maybe the uncertainty with regards to Sun Pharma will probably end.
Okay, we've got a question coming in, and this is Akash Kulkarni, who's written in with a question on Sun. He's got 13 shares of the company. His cost is 587 rupees a share. He's been holding the stock for the last 3 months, but can hold. Wants to know if he should do something right now, given all the news flow. Ashwini, Sun Pharma, lots of interest, lots of questions. What would you do?
some may say that, this is a bottom, but people have predicted bottoms right from 600, 500, 400. The sense is that the business isn't doing great. Plus, you have these other, non-issues which are springing up. So, unless you are a 5-year investor, I don't think, buying into Sun Pharma is really sensible. I want to see at least a 52-week high here before I buy, and 52-week high is fairly low. So the idea is don't jump on every pullback that happens and wait for at least a 52-week high to be formed before you want to buy.
Okay, all right, Ashwini, that point is taken. I'm sure everybody is very cautious going into Sun now. In earnings today, FMCG major ITC reported what was a positive set of numbers. For the third quarter, the company met street expectations on the profit as well as revenue front. However, there was a marginal miss on the margins front. The stock, though, ended the day down around 4% on profit taking. Manglam Malu joins in with more details on that. Manglam?
Well, ITC lost in today's trading session primarily on account of profit taking, because if you take a look at the results, they were pretty much in line with what the street was working with. To start with the cigarette volume growth, it appears as if the company's posted a cigarette volume growth of close to around 7 to 8%, pretty much in line with our poll of 6 to 7%. Revenues of around 11,228 crores, also above street expectations of 10,740 crores. EBITDA of around 4,326 crores, again upwards of our expectations of 4,300 crores. Net profit of 3,209 crores, above a CNBC TV18 poll of 3,077 crores. More importantly, the net profit growth has come in also on account of a higher other income, which came higher by about 200 crores year on year. The FMCG business has done fairly well. 11% revenue growth out there, with a strong growth in the company's operational performance out there, as well as hotels and paper business too. So the cigarette business margins came in slightly lower on account of higher tobacco costs, as the management alluded in their press release. The stock enjoys a valuation comfort, so it will be very interesting to see how it goes from here.
Mangalam, thanks very much for that. Aliasgar Khambati from Hyderabad has written in with a question on ITC. He's been holding 140 shares of ITC. His cost is 304 per share, that is 304. And he's a medium-term investor and wants advice whether he should hold or sell. Deepan, to you, ITC?
Sell, I think. I know the street may have liked these numbers, but at the end of the day, it's amongst the slowest consumption-oriented stocks, and they haven't really been able to get traction as far as the FMCG business is concerned, which they have been focusing on. And FMCG and hotels are still a very small contributory to the consolidated numbers. And paperboard being commodity business, there's a high degree of volatility in the earnings over there. So on the whole, the picture doesn't appear to be that bright for ITC, and I would say at an opportune moment, the investor must consider exiting out of ITC and get into some other consumption-oriented stock. Could be FMCG, could be building material, home improvement, anything but tobacco at this point of time. Too much of interference is there from the government as far as rules regarding which smoking or warning signs which have to be given on the pack, and that has certainly impacted the volumes for cigarette, and they face competition from imported cigarettes as well. So the picture doesn't appear to be that bright for ITC, and you could certainly have a trading bounce occasionally, but long-term trajectory of ITC is that of an underperformer.
Okay, sell ITC, that's the advice coming in from Deepan. Interglobe Aviation reported numbers. Numbers came post-market hours. There was a 75% drop in the third quarter profits, but the operational performance has seen a turnaround of sorts. And by the way, this is also a turn into green from the black. Last 2 quarters, there have been large losses. The company has seen a 28% growth in revenues, hitting nearly 8,000 crore rupees with a profit of 190 crore rupees. More importantly, margins have also recovered to about 21% compared to 3.6% in the second quarter. Yields for the company have also risen 3.7% from 3.7% to 3.83%. Ekta.
Okay, well, let's move on then. ICICI Prudential, in fact, was lower in trade today after reporting what was a muted result. The stock was down 11%. This is after the company reported more than 30% drop in net profit year on year. Abhishek Kothari joins in with the highlights.
ICICI Pru reported a bad set of numbers already on account of weak expectation that analysts had built in. So if you look at the gross premium, that were up 10.5% YOY and they were down about 1.5% quarter on quarter. However, in this gross premium, it was largely led by the group insurance and not the individual insurance. And the value of new business margin, which is already on the lower side for ICICI Pru, declined further by 50 basis points on a sequential basis. The persistency ratio also deteriorated on a YOY basis, which led to brokerages actually downgrading the stock and the earnings estimate. So CLSA, for example, for second consecutive quarter has downgraded the value of new business, and they have cut the target price to 430 from 450. If you look at Jefferies, they have downgraded the stock to underperform. MK has also downgraded the stock to accumulate, while Investec has also cut the target price to 485 from 500. Back to you.
Let's get some views going on this on ICICI Pru. Abhishek, thanks for that analysis. Ashwini, first up, your thoughts. I mean, the stock at 305 essentially is below what the company sold the stock at in the initial public offering. What would you say? What would you do with ICICI Pru?
See, similar problem here, that while insurance is a greenfield sector, nothing really is happening. I mean, they are still all of them trading at 52-week lows. Again, what do I want to do? I want to see a 52-week high. So possibly if we can cross 425, 430, that would be a good place to buy. Because if you buy here and the stock keeps falling, then whatever the valuation, whatever the fundamental, etc., that doesn't help anybody. I think 100 odd bucks will give you a nice place where to re-enter, and the fundamentals and the institutional investors probably would have bought first, because all this bravado in weak stocks often does not pay.
Okay, well, Dipan, on ICICI Pru, and a lot of brokerages also unhappy.
Yeah, that's true. I think one needs to go a bit deeper as to what has happened in ICICI Pru to understand whether this is just a one-off number or whether it is a trend which may continue for a few more quarters. Anyway, stock is quite expensive, so that also plays on the minds of investors. But I wouldn't paint all insurance stocks with the same brush. I think SBI Life, some of the other insurance companies may do well. But these are really long-term businesses. You need to value in insurance companies gets created over decades. And at an inflection point, these companies will start generating a lot of cash and very high return on investment, and again start building shareholder value. So although you should be neutral to slightly overweight in insurance, it is a challenge to find a consistent performer. And I thought ICICI Pru was one which could deliver on a consistent basis, but these results certainly have been an eye-opener. So let's just wait and watch. I would say, considering the reaction which has taken place in the stock, maybe not sell today, tomorrow, but at an opportune moment when there's a contra rally or some minor short covering, look at that as an exit point.
Okay. Deepan, thank you very much for taking us through what you make of all those stocks. Ashwini, thanks very much for being with us here on this edition of Markets Today Talkback. Appreciate it, gentlemen. Well, we move on to the last story of the day then, and it is a CNBC TV exclusive news break. State Bank of India chairman may meet the SEBI chief Ajay Tyagi to discuss Etihad's revival proposal for the cash-strapped Jet Airways. Remember, Etihad had listed out conditions to infuse the $35 million into the debt-laden carrier. Lata Venkatesh actually is now with us on the phone line. She picked this up, the possible meeting. Lata, what are you picking up? I mean, State Bank of India would like those exemptions to come through for a resolution to take place, but what's your sense?
The SBI chairman is meeting the SEBI chairman because they're not able to get a better deal. It appears that Etihad is refusing to give anything more than 150, which militates against the substantial acquisition of shares and takeovers code. If you go by the high-low of the last 6 months, it should have been 262 rupees. But it's 150, and that's the offer, take it or leave it. They also want Jet Airways shares to be pledged. Only then they will be releasing this $45 million. So clearly they want Naresh Goyal and related parties to not have any substantial say.
All right,
Okay.
Lata, thanks very much for that. I think Lata was on a, you could see.
Was on an
flight.
airline. Don't know which airline, but any which way. Thanks, Lata, for that. And it's a goodbye from Prashant and myself. Thanks very much for watching. More news and updates follow.